So I wanted to talk about inflation again, given that the Fed is going to tolerate even more inflation than they have in the past. You can see my previous discussion on this topic if you follow the link here. The key point today is that inflation sucks. We don't like it. Why don't we like it? Because inflation destroys the purchasing power of a dollar. On this chart, you can see over the last 100+ years that the value of a dollar has been destroyed down to now being worth 3 cents on the dollar of what it was once worth. In this chart here, going back only 20 years, we can see that inflation isn't equal across the board. Things like healthcare and college tuition have skyrocketed, where just the CPI for all items is up more than 50%, which isn't particularly tolerable, or isn't particularly pleasant. You can see things that are crazy here. According to this chart, they are now giving away TVs. Of course, this isn't true because they do this little trick with inflation where they say that if any technological advancement lowers the price of the goods, so even though TVs are actually more expensive, you can no longer buy a tube TV, that they're going to say that the advancements outweigh the price gain. So in fact, we're going to pretend that these prices have fallen by 98%, which is of course complete nonsense. You can see that with a lot of the things that have gone down, which means that the CPI for all items in terms of what you actually have to pay has gone up much more than indicated on this chart. Again, not pleasant to have to spend this much more money. Now, central banks have broken capitalism. At least that's the headline from a recent Bloomberg article. You can see a famous quote here by John Maynard Keynes that the best way to destroy capitalism is to debauch the currency. You can keep reading that yourself, which is, of course, what the government has done, as we saw in the chart down below. I've been thinking for years now that we've been in this debt party, right, where we just load up on debt, we get drunk and wasted on debt. And of course, it has ramifications. It creates problems. Instead of sobering up, we just have more and more debt. We just keep kicking the can down the road, or keep kicking the need to solve some of our underlying problems. Of course, doing this where we have low interest rates and high debt creates long-term fragilities. We have, of course, lots of leverage and risk-taking that ebbs and flows, but certainly with low interest rates, we're seeing a lot of that. And of course, there's social inequality and corporate inequality, which are very much in the news and very real ramifications of these policies. Now, the Fed is basically daring us to take risks. So the way we can take risk is instead of putting our money, in CDs, we put it into the stock market. Unfortunately, what we see is that the vast majority of the population is unable to put money into the stock market. Here we see that the bottom 60% of US households own very little, basically none of the stock market. The top 1%, of course, holding almost 50% of the stock market. So these policies of the Fed basically are screwing the majority of the population, benefiting a few, and destroying the value of the dollar. These are not pleasant outcomes. We don't want them. All I'm going to ask you to do is to take a step back and reevaluate the central bank policies, quit drinking the Kool-Aid. There has to be a better way forward. Thanks so much for listening.